You explain to people why they should join the gang. Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
Whoa!
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network.
Oh, God.
Are you nuts?
The chart.
With your host, Phil Grande.
Good afternoon. Okay, so a lot of the information that's out there is really confusing investors because we're getting a mixed bag. Give you an example. 1 minute they're telling us how great the economy's doing. Well, a great economy needs jobs, but guess what? Our jobs are going down, not up. And we have a terrible, job openings are really getting crushed. But they keep telling us how the economy's doing well. So that's why when you're trading, you gotta just shut that stuff off. Don't make any decisions on a trade based on what you're hearing about if the economy's good, the economy's bad, if there's inflation, no inflation. Here's what I mean. Listen to Powell here. He just confuses everybody. Let me show you what I mean.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
That drove the market down yesterday. That is keeping the market down today. And that is driving the NASDAQ down today, 311 points. So, again, if you keep... Here, let me play one more.
Significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs. And much of the time they're talking about AI and what it can do. So we're watching that very carefully, and yes, it could absolutely have implications for job creation.
All you have to do is look at a chart, and I'll tell you what's going on. I'll grab that chart for you right here. Let's see. Here we go, right here. AI is not creating jobs. Terrible. We don't get jobs from AI. Here, look at this chart. I showed it to you yesterday. I mean, this is nuts. So it's showing here, again, that the S&P is up 75%, okay? But the job openings have plunged 33%. See it right here? Jobs going down 33%. And then, of course, our stock market from right here in 2023, or let's say, late 2022, early 2023, is up 75% from that time. So why does the market keep going up if jobs keep going down? I mean, doesn't it mean people have less money? Sure it does. Of course it does. But again, they keep this economy afloat by increased money supply. If they can't keep the economy afloat by increasing the money supply, then they'll use that money again to do stock buybacks. But think about the 5 largest banks, okay? They would always take right now they have a problem. They got losses of $575 billion. $575 billion, but nobody's talking about it. These are the 4 largest banks in our country. Now, that never happened before. Never happened before. Because what they would do is they take the money they have set aside for reserves, like bad loans and so forth, and they would sell the money to the Federal Reserve. And then by selling the money to the Federal Reserve, they pick up interest. So they never have these kind of losses. Well, that's not working so well anymore. I mean, it just isn't. So again, these big banks are really having a problem. Everyone says how great they're doing. They're not. And when you look at the stocks, the other day, I told my gang members, we got to get ready to keep shorting these banks. And if you remember when they came out with the, here, let me get this out of here. When they came out with all the numbers, okay, and the earnings, everybody went nuts. But right after, yeah, they rallied, then right after they gave it all back. And now they're struggling trying to get these banks, breaking out. The only banks that I like right now, I've been watching, is to buy Bank of America, BAC. We're seeing money go in. We got a couple buy signals. You can see our color code charts turning green. We got some W's, some V's. That one's working. Morgan Stanley's another one that's working. We got some buy signals, some W's and V's turn green. But these banks overall are not healthy. They're just not healthy, okay? And the regional banks are really having a tough time. I wouldn't touch the regional banks. If you're going to invest in banks, and banks are good, okay, and their growth, remember, their banks are considered value stocks. And if the yields keep going up, that's where you want to be, in value stocks. And give me just 1 second here. Okay, there you go. Yeah, you want to be, if you see the 10-year Treasury yield going up, then the banks, okay, will start doing better, okay, because they're part of value stocks. But overall, if you're investing in banks right now, I would be very, very careful, okay? And because, again, you can see where the earnings came out on October 10th, they all took off, everybody's celebrating, and then they plunged, and now they're trying to make up that ground again. They can't get to their old highs back here. And so, like, you go back to September of 2025, look at JP Morgan, one of our favorite banks we trade all the time. You look at Citigroup, it's having trouble clawing its way back to its high in September 23rd. Bank of America, okay? BAC, that's the only one that's crawled back to its all-time high. So these banks are really having a problem, so be careful trading your banks. Yeah, I want you to listen to something else here. They're talking about AI again.
Significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do.
That's right. AI, as I said a moment ago, not doing anything for the economy. I mean, they're just not creating jobs. Then he says this the other day.
I mean, shutdowns are...
I'm sorry. Where is it over here? Oh, wait a minute.
I mean, shutdowns are terrible. And of course, there will be, families that are going to suffer. We take that responsibility very seriously. But it is one of the few leveraged times we have.
Congress just said, we're not going to take our paychecks till we figure this out. That would be a noble step in the right direction, I would say.
That's not everybody can afford to do. You got some young people there with kids. That
oh, geez, these guys are, I don't want to hear him, rather. So I'm just trying to find here for you. I gave you yesterday the amount of jobs. I mean, the layoffs are just huge. Here it is right here. This is crazy, the layoffs. So when they tell us the economy's doing good, and you look at the job numbers and how people are getting laid off, it's just insane. I'll give those to you in a moment. I want to play a couple more of these cuts. All right, here we go.
First of all, it's a strange economy right now. We're talking about that GDP is quite strong, but the labor market is soft, and we're waiting to see how that will evolve.
Labor market weak, I guess so.
Some people are really, really having a good time right now, and a lot of people are feeling a lot of stress.
Yeah, well, who's having a good time? The very top 1%. That's where all the wealth's going. That's where all the money's going. So when you sit there and you see this week 48,000 layoffs, UPS, Amazon, 30,000, Intel, 24,000, Nestle, 16,000, and they tell you how the economy's doing well, and we haven't seen this many jobs. I was listening to this yesterday, going, "What the hell are they talking about? We haven't seen that many jobs. The jobs are horrible, terrible." And then the big thing is the household debt. When you look at our household debt, it's insane. I mean, we got historic household debt. I mean, we're right now, if I got the number right, let me just check it out here, and I'll put it out so you can see it. And then they're telling how consumers are strong and they're spending. But the household debt is 18. Let's see, we're about right now, I think household debt's about, what's it, 18? I think it's 18. Let me see, I gotta make the right one. $10 trillion right here, right? 2024. I got that right? 12 trillion there, thank you. 12 trillion. Non-housing debt is around 16 trillion. But let's just talk about the housing debt. That's the total debt. People are buried in debt, okay? So when you hear how great the economy is, things are going good, we've never been richer than this, and blah, 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 none of it's true.
And so you have this two-part economy. The easing of the rates is because most of the economy is elements of weakening. If you're looking at a lot of the economy, you see a weakening in that kind of economy. At the same time as there's this bubble going on developing. So a monetary policy for both is not going to work because of that element of divergence. So I think it's probably going to produce more of a bubble.
We're in a bubble. And the reason why our bubble is going to get bigger and bigger and bigger because they won't stop increasing the money supply. And why won't they stop increasing the money supply? They want to leverage the margin debt. I talk about it all the time with my gang members. They want to keep leveraging margin debt so to keep the stock market going up. Bring these FOMOs in, or I call them tourist investors, people who are afraid of missing out. They keep jumping in. And the smart money's going, here, take my stock. Here, take mine. Take my Intel stock. Here, take my NVIDIA stock, take my Microsoft stock. But we don't see it go down because you got all this margin, all this money being pumped into Wall Street. So they increase their margin debt. So the FOMOs will turn around and borrow, and they just keep buying stocks, think they're just going to get richer and richer. Here's another one. This is another one.
Some people are really, really having a good time right now, and a lot of people are feeling a lot of stress.
3 minutes.
Who's having a good time? The very, very top. The top 1%. They're having a great time. That's where all the wealth is. And when you hear them talk about consumption's good, no, it's not, because it's only a very small group that's consuming. And again, that's the very, very top. So, again, when you see, here, I have it right here for you. So here they are, they're cutting rates, correct? Why is it, if things are so good, we have more car loans? The only way people can buy a car today is 7 years. 7 years. People are financing. By the time their car's 7 years old, it's falling apart. Got 125,000 miles. So everybody's getting a 7-year car loan. It's unbelievable. So, and it makes up about, as I say, near 28, 30% of the sales. If you couldn't offer 7-year car loans, if you're a car dealer, you're out of business. You got to do 7-year car loans. Imagine that, 7-year car loan. That's insane. And this is doubled in 8 years. It's absolutely nuts. And then you go, they're telling us how great the economy is. Well, then how come we have an historic housing affordability gap? Meaning, to purchase a home today, an average price home, $462,000. That's if you get a 30-year loan, fixed rate at 6%, that's $3,400 a month. You know what your income has to be to get approved? You got to have a minimum of $125,000. And people are struggling. The husband and wives are working, trying to get that $125,000 to buy a house. And remember, houses have what was the number with it? Houses went up, oh God, I had it yesterday. It was ridiculous. It was up, was it 200? Let's see. It was crazy. Houses up in the last, since 2000 and, I think 2008 or 2020. What was it?
Median home price doubled.
Yeah, since what, 2000?
2008.
Yeah, 2008. Prices have doubled. That's 2008. But wages haven't. Wages haven't doubled.
Wages are 42%.
Wages gone up 42%. That's insane. Think about it. People are getting screwed because of inflation. And when they tell you there's no inflation out there, and that's why Powell wants to keep raising the rates. He wants to fight inflation. He doesn't be cutting. He's sitting there and he says our target is 2% inflation. Inflation's 3%. So what the hell? That's why when everybody got mad yesterday, the stock market's down today, it's negative again, because everybody's angry. They're saying, no, keep cutting rates. No, you should be raising rates. It's unbelievable. We'll be right back after this break.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Okay, so we're talking about the confusion in the stock market because we're getting mixed messages from the suits on Wall Street, and we're getting mixed messages from Washington. You turn on and you'll see somebody come on and say, people are never made so much money as they're making now. Everybody's working, and that's not true. Everybody is not working, and if you take a look here, I got a chart for you. Not making this stuff up. This comes from the government who says everybody's working. Really? Well, look at this. See, here's what they're doing. They know the only reason why the stock market's going up because of AI. And why? Because they keep printing money to increase the money supply. And then, as I tell you, they use that money, they leverage it by using these margin debts. Now, if you look at the chart here, look how the S&P is soaring. But look at the job openings collapsing. This is from the government. So how can they say everything is ducky? I mean, give me a break. What are you, nuts? That's not ducky. Unbelievable. That's just it just drives you crazy. Now, the middle class are really taking it on the chin. The middle class is our biggest hope. The middle class it keeps this country together. The middle class, they're the ones that create small businesses in your community. The middle class is without the middle class, we are screwed. And the middle class is having such time, terrible time. They're struggling. They're struggling. So if you're between 35 and 48 years old with 2 kids, that's a middle class person. You're not making it. You're not making it. It's very hard. I said yesterday, we have, I forgot, a big increase in the amount of people who are 33 years old who are living still at home because rents are so crazy. Rents aren't coming down. They're still nuts. So again, we're getting all this mixed information. Now, the stock market, if we go and take a look at our stock market, let's go look at gold. Everybody's worried about gold. Gold is going to go back up because, again, all our lenders, China, UK, Japan, what do you think they're going to do? Come here and buy our treasuries? They don't want anything to do with our treasuries because our economy sucks. They don't want to loan us. They're not going to loan us. I mean, they will, but Trump knows we can't borrow money from them. That's why Trump's borrowing money short-term notes, 1-year notes, because T-bills, because to borrow from China or the UK or Japan, we're going to have to pay a hell of an interest rate. So again, that's why he's not doing that. But the economy can't be fine when we revised away 1.5 million jobs. You remember that? 1.5 million jobs here in March of this year. How can we be doing well? Records. Now people are working part-time. 600,000. Here's what we did. We dumped 375,000 full-time jobs and took on 600,000 part-time jobs. All these companies are trying to get rid of their labor costs, and this AI is not going to help us. That's why we're not seeing any job openings coming from AI. Wouldn't it be wonderful if they say, oh, they're investing $1.5 trillion, that's the run rate, they're investing in AI, and boy, our jobs are increasing like wild. No, our jobs are going down. Jobs are going down, terrible. Now, take mortgage rates. Mortgage rates, about 22% of our mortgages people have are under 3%. Now, that's a good thing. That's a good thing, and that helps, okay? But your mortgage right now, you can't get under 3%. What's the average 30-year mortgage now? About 6%, something like that? Double that? Double that. And that's what's putting a lot of pressure on the housing market. If you got a 3% mortgage, you're not going to sell your house. So what happens is there's not that much inventory out there. So house prices go up. Now they've been coming down. We've been seeing it now. Finally they're coming down. They're going the other way, but they're not coming down enough that we can take the middle class and give them a home. It just doesn't work. So, and then you go to the stock market. The wealthiest half of American families own approximately 97% of the wealth. Half, the wealthiest half of our families own about 97%. 97%. Then we're talking about the top 1%. I'm sorry, top 10%. Top 10%. So top 10% owns 90% of our stocks. Think about that for a minute. 90% of the stocks. When I say, oh, the market's up, everybody say, wow, everybody's making a lot of money. No. 90% of the stocks are held by 10% of the people. What are you, nuts? 1% of the people, They own 93% of all the stocks that are traded. Think about that. So when you're trading stocks, you got to go where the money is. Just don't listen to the stuff they're telling you on Wall Street. Don't listen to that crap. Don't listen to Kramer and all these people telling you the hot stock. The only way you can make money in the stock market consistently, I mean consistently, you've got to stay with a minimum amount of stocks. The professionals don't trade more than 6 stocks. And the professionals always trade spiders. Because over the last 10 years, even if they didn't short the spiders, they're up over 10%. You don't get that from your 401k. But just think about it. If you just put money in your spiders every month, and you learned how to sell them short, so when they go down, you make money. Your 401k, you can't make money when they go down. So if you know how to sell short, and your 401k is going down, you hedge it by selling short the spiders. We'll show you how to do it. I mean, so when everybody tells us how everything's just wonderful, they think it's wonderful because they look at the stock market. But when you think about the stock market again, the S&P 500, 490 of those companies have no earnings. They're lying. They come from 10 companies. That's it. That's just absolutely nuts and insane. So then the biggest problem we got right now, okay, in our stock market is the breadth. And I mean, the stock market, remember, everybody looks at it as really great. It's going up. It's healthy. It's not. We don't have a healthy stock market. No, because the problem is we got too few stocks. That's the problem. We got too few stocks carrying this whole market. You can't do that. I mean, at some point, it's going to really bite us, and it's going to really hurt us. So again, when you see, when they say, "Oh, look at the market, we hit every day here, we hit new all-time high." Really? But how many stocks? How many people made money yesterday when the market hit an all-time new high? Very few people. First of all, the stocks are nuts. The PE ratios are crazy. And when you look at the softwares, you look at SMH, look at Micron Technology, look at Intel, Adobe, okay? Look at those companies right there. That's where the money is going. That's where money is going. And so why would you be anywhere else? You wouldn't. It's just, if you're buying anything other, okay, than, the real tech AI stocks, you got to be crazy, because the AI stocks are what? Semiconductors, semi. Here, I'll show you. We got in semis right now. If you go look at the banks, you see how weak they are. Now they've been rallying, right? They've been rallying up a little bit, trying to catch up since their earnings on the 10th, right? They haven't done well. But if you go and take a look at your AI sector, let's take the chip providers, okay? Let's take the biggest ones, NVIDIA. NVIDIA keeps going up, right? Just keeps. That's where everybody is, in NVIDIA. But let me ask you, how many people, if NVIDIA opened up tomorrow morning, okay? NVIDIA opened up tomorrow morning, and it starts breaking, let's say, 100. Right now, it's at $202. But let's say it broke 180. 180. Man, this thing would collapse, right? How many people can sit there and say, you know what? I can't wait until NVIDIA breaks below the support line. Here, let me give you the real numbers. Support line, about 180 is support line. If it breaks that support line right there, you're going to see a hell of a crash in NVIDIA. How many people are prepared to say, I have no problem with that. I'm in it. We got into NVIDIA. Last time that we put a lot of money in NVIDIA, it was back here in May 7th. So from May, we bought NVIDIA, I think it was somewhere, I don't have the numbers on me, but I think we bought it somewhere around $113. Today it's $202. So what is that? That's 78. That's a 78% gain. 78% gain. Now, people ask, well, how do you stay in the market so long? Well, because if you watch a chart that shows you pricing. Is your pricing going up or pricing going down? In other words, you got to follow, not the BS you hear every day on these financial stations. You want to follow the money. And the most important part when you're buying a stock is what we call the sweet spot. So let's just take, for example, NVIDIA. If you bought NVIDIA, okay, at, let's say, $112, and the sweet spot ended at 112, the sweet spot ended around 154. What is that for gain? That's, what's that number, Will? 25%. So if all you did was waited for NVIDIA and you hit that sweet spot. Every stock has a sweet spot. Wall Street doesn't want you to understand this. Has a sweet spot. How do you catch the sweet spots? You got to stay with the same stocks. Like we have our 6 stocks in the S&P 7. So NVIDIA is one of our stocks. So when our chart, it will turn green.
3 minutes.
It will tell us the sweet spot has started. And from the bottom of the sweet spot to the top of the sweet spot, what was that number? Would you say our gain?
25.
We had a 25% gain. You don't have to trade the rest of it. Now, every stock has a sweet spot. So if you got 6 stocks, that means each one of your stocks, you're going to get 2 sweet spots on the way up. So you got 12 sweet spots during the year. On the buy side, you got another 12 sweet spots on the way down, selling short. That's 24 opportunities to buy and sell NVIDIA.
2 minutes.
So you don't buy NVIDIA again until you buy the sweet spot and you execute the sweet spot that's going down. That's how you make money. When people say, what price should I buy this at? What price should I buy that at? What's the price I should buy this at? I always tell them, who cares? It's not the price. It's not the price. This isn't a pound of cheese. You got to wait for your buy signals. The buy signals determine when you're going to buy, not the price. But Wall Street's got everybody's head so screwed up with trading. Oh, it's the price, because they can manipulate you. But if you know how to chart, and you have the chart that we have, and you wait for those sweet spots, so you have 6 stocks and wait for the sweet spot. Long and short. Here, I'll give you an example. We have our portfolio. We've had these same stocks for about, 3 years now? 3 years, the same stocks, and I'll show you what they are. The same stocks. Let's see. Let me get them for you here. Okay, so we have the spiders. All right, let's take AVGO, Broadcom. Now, Broadcom, look at the money.
30 seconds.
We bought Broadcom when it had the sweet spot started on Broadcom April 30th. We got in around 183, use 183, okay? And then the sweet spot ended, okay, at about 253. Oh, I'm sorry, 183 to about 258. What's that?
40%.
That's a 40% gain. So if all you did is waited for NVIDIA to set its sweet spot up,
8, 7,
look at the returns you would make. Now you wait for it to do what? Set up for its short sweet spot. That's how you make money. It's not the price that you look at, it's the position, the buy position, okay? If you want to learn how to do this, just go to philsgang.com.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.